Welcome back to Accountant's Desk. In today's video, we will solve final accounts problem. If you haven't watched the part 1 and part 2, please check it out. So let's get started. The following were the balances extracted from the books of Mr. Ram as on March 31st, 2025. Debit balances, amount, credit balances and amount. Debit balances, cash in hand 540, cash at bank 2630, purchases 40,675, return inwards 680, wages 8,480, fuel and power 4,730, carriage on sales 3,200, carriage on purchases 2,040, opening stock 5,760, building 32,000, freehold land 10,000, machinery 20,000, salaries 15,000, patents 7,500, general expenses 3,000, insurance 600, drawings 5,245, sundry debtors 14,500, and credit balances: sales 98,780, return outwards 500, capital 62,000, sundry creditors 6,300, rent 9,000. And we have adjustments, that is stock in hand on March 31st, 2025 was 6,800. Machinery is to be depreciated at the rate of 10% and patents at 20%. Salaries for the month of March 2025 up 1,500 were outstanding. Insurance includes a premium of 170 on a policy expiring on September 30, 2025. Then future bad debts are 725. Create a provision at 5% on debtors. And rent receivable 1,000 rupees. So let's start recording. The first entry is, let's start with the first transaction, cash in hand 540. Cash in hand, it is balance sheet asset side, 540 cash in hand. Cash in hand 540. Next, cash at bank 2,630. It is also balance sheet asset side. Cash at bank 2,630. Next, purchases 40,675. Purchases, it is trading account because it is directly related to the business. So trading account debit side. First we record opening stock, then two purchases 40,675. They have to record purchase return. So next, return inward. This is sales return. We sell the goods and then we will receive the returns. That is called return inward. So it is trading account credit side. First we record buy sales, then less sales return. That is 680. Next we have wages. Wages is trading account debit side, two wages, because it is directly related to the business. How much? 8,480. 8,480. Next we have fuel and power, that is related to manufacturing. So trading account debit side to fuel and power. $4,730. Next we have carriage on sales, that is indirect expenses, because it is related to sales. We have carriage on purchases also. This is direct, this is carriage inward, and this is carriage on sales is carriage outward. So it is P&L account debit side. to carriage outward. Carriage on sales 3,200. Next we have carriage on purchases. This is carriage inward to 2,040. Then we have opening stock 5,760. Opening stock trading account debit side. Opening stock 5,760. So 5,760 opening stock. Then we have building, that is 32,000. Building is asset, so balance sheet on the asset side, that is 32,000. Building 32,000. Next we have freehold land, that is 10,000 rupees. That is open land, we have 10,000 rupees. That is balance sheet asset side, free land. ₹10,000 freehold land. Then we have machinery 20,000 rupees, and we have adjustment on machinery. Okay, 20,000 rupees machinery, that is balance sheet asset side, because machinery is asset. 20,000. Then we have adjustment. Okay. Next, salaries 15,000. Salaries is P&L account because it is indirect expenses too. Salaries 15,000. We have adjustment on salaries also. Salaries is 15,000. Then we have adjustment. Okay. And then patents 7,500. Patent is asset, so balance sheet asset side 7,500 patents. 7,500 patents. Then we have general expenses. General expenses is indirect expenses 3,000 rupees. To general expenses 3,000 rupees. Then we have insurance, that is 600 rupees. Insurance is indirect expenses. So profit and loss account debit side insurance to insurance 600 rupees. We have adjustment on insurance, so inner column 600 rupees. Then we'll mark for the adjustment. Okay. And then we have drawings 5,245. Drawings will deduct it from the capital, so balance sheet liability side first capital, then less drawings. 5,245. Then we have sundry debtors 14,500. Sundry debtors is asset, so balance sheet on the asset side 14,500. We have adjustment as well. Yeah, we have adjustment on sundry debtors, so balance sheet we have adjustment on patents also. Machinery and patents, yes, we have adjustment for patents. Next we are recording sundry debtors. What is the amount? 14,500. 14,500. Okay, we have two adjustments for debtors, 1 and 2. Yeah, so we'll leave extra space. Then on the credit side, credit balances sales. Sales is trading account, credit side. So by sales we have already recorded, that is 98,780. And the outer column amount is 98,100. Then we have return outward, that is income. 500 rupees. Return outward means purchase return. We have purchased the goods, now we are returning it. So less returns, that is 500, and it is 40,175. Then we have capital, 62,000 rupees. Capital is recorded in the balance sheet, liability side, 62,000 rupees. Capital, 62,000 rupees. Then we have sundry creditors, 6,300. Sundry creditors is liability, balance sheet, liability side. Sundry creditors, 6,300. Then we have rent, 9,000. Here it is in the credit side, credit balance. So it is income. We have received the rent. Okay, because it is credit side means credit is income. So profit and loss account, it is rent is income. Buy rent, 9,000. And we have adjustment, 1,000. 9,000 in the inner column, and we'll mark for the adjustment. Now we have recorded all the transactions. Let's move to the adjustment. Always remember, for adjustment, we will record the transaction twice. Okay. First, stock in hand on 31st March 2025 was 6,800. This is closing stock. Closing stock we will record trading account, credit side, closing stock, and then balance sheet in the asset side, closing stock. So let's record it. Buy closing stock, that is 6,800. And in the balance sheet, closing stock, 6,800. Then next is machinery to be depreciated at the rate of 10% and patents at 20%. Here the cost of machinery is 20,000. Okay. Cost of the machinery is 20,000 equals to cost of the machinery is 20,000 and we depreciate it by 10%. So the depreciation amount is 2,000 rupees. So we will record it twice. That is, once in profit and loss account on the debit side, we record depreciation on machinery. ₹2,000. Then the other entry is in the balance sheet, deducted from machinery less depreciation 2,000, and the amount is 18,000. And we have other depreciation, that is patents. Patents is depreciated at 20%. The amount of patents is 7,500. 7,500 patents, and we depreciated by 20%. So the depreciation amount is 1,500. So we record it twice, that is in the profit and loss account depreciation, and in the balance sheet depreciation we deduct from patents. So depreciation on patents, that is 1,500. And next in the balance sheet, less patents, 1,500, and the amount is 6,000. Next, we have salaries for the month of March 2025 amounting to 1,500 were outstanding. This is outstanding salary. That means we should have paid 1,500 salary, but we haven't paid it. So it is recorded in profit and loss account and balance sheet. From the profit and loss account, we add outstanding because it increases our expenses. So add outstanding. How much? 1,500. So it is 16,500 outstanding and salaries together it is 16,500, and the other entry is recorded in the balance sheet. Balance sheet it is recorded on the liability side because it increases our expenses. So outstanding salaries, that is 1,500. Next we have insurance includes a premium of 170 on a policy expiring on September 30, 2025. It means we have taken the insurance on 1st October 2024 and it expires on 30th September 2025 because insurance policy is usually 1 year. So we have used the insurance for 2024 October 2024 November, December 2025 Jan, Feb and March. Okay, we have used for December 3 months and we have used for 2024 3 months and 2025 we have used for 3 months. That is total we have used for 6 months. So we have paid total of 170. 170 we have 170 we have used for 6 months and the total premium is for 12 months. So only 85 we have to pay for the year ending 31st March. Okay, so insurance, so prepaid insurance we have to less only prepaid because the total insurance amount was 170 and it only 85 is related to this year. So we have deducted only 85. So it is 515 and the other entry is in the balance sheet. That is prepaid insurance. It is asset. That is 85. Next we have future bad debts are 725. Create a provision at 5% on debtors. Future bad debts means the debts we have recorded here 725 are related to the next year, that is future bad debts. So from 14,500 we have to deduct 725. Okay, here it is recorded twice, that is once in profit and loss account debit side and other is balance sheet asset side. So profit and loss account debit side future bad debts 725. 725 in the outer column, and from debtors we have to less because it is related to the next year. So from bad debtors less future bad debts 725 and it totals to 13,775. Okay, then we have create a provision at 5% on debtors. Means the remaining amount what we have here, we should create provision, that is 5%. Okay, the amount is equals to 13,775 into 5%. Okay, we have to create depreciation at 5%. So it is 688. We will record it as 689. Okay, provision for debtors, that is 689, and the other is in the balance sheet less provision, that is less provision, that is 689, and in the outer column it is 13,086. Next we have rent receivable 1,000 rupees. Rent is income, we have to receive it. We have earned the income but we have not received, that is accrued income. So in the profit and loss account, add accrued income, that is accrued rent 1,000 rupees, and the other entries in the balance sheet. First we'll record in the profit and loss account, add accrued rent. We have earned the rent but we have not received it, 1,000, total 10,000. 1,000, total 10,000. Okay, and the other entry is accrued rent, that is 1,000. We have recorded all the transactions. Now let's close the accounts. Trading account 61,185. Here it is 1,04,900. So 1,04,900. 1,04,900 minus 61,185. It is 43,715. It is 43,715. So to gross profit carry down 43,715. Okay. Next, gross profit by gross profit brought down. How much? 43,715. 43,715, and on the debit side it is 28,129. So credit side is more, 53,715. 715, 53,715, 53,715. After deducting all the debit side amount, it is 25,586. To net profit. carry down. If 25,586. And net profit, we will add it to the capital. Add net profit. 25,586. So it is 82,341. And the total is 90,141. And here it is 90,141. So our balance sheet tallied 90,141, 90,141. So that's it for this video. If you like the video, don't forget to like, share and subscribe to Accountants Desk for more accounting videos. Thank you for watching.